What's up everyone, this is Tony with JRNYcrypto. In this video, we're going to be going over my investing strategy for cryptocurrencies in a simplified format. I'm going to go over my entry strategy and exit strategy and tell you guys my plan going forward for the long term, as well as how I plan to take small profits along the way. Before we get started, I do appreciate if you guys like the video, subscribe to the channel if you haven't already, and hit the bell to be notified when I make crypto videos. Alright guys, so in this video, we're going to go over my investing strategy simplified. I'm going to go over my entry strategy and my exit strategy, tell you guys how I plan to stagger orders for maximum success in the cryptocurrency space for the long term. So having a good entry strategy is more important than a good exit strategy in my opinion, especially if you're a long-term investor. Then none of this short-term manipulation and market crash really matters. For instance, if you did buy at the very peak of the last bull market at $20,000 Bitcoin, you would still be in huge profit after the recent market crash. So I did write out a short guide here I'm going to go more in details on and give you guys some examples of both entry and exit strategies, but keep in mind it's not financial advice. You guys should craft your own entry and exit strategies and know your personal goals going forward. Everyone has different goals with investing, especially in the crypto space where it's extremely volatile. So I did a summarized version of this on a tweet yesterday. So my strategy simplified: when there is mass fear, dollar cost average on the way down, and when there is mass greed, take profits on the way up. A small bonus here: take out your initial investment when you're up 2 to 3x on small cap altcoins, and always have stablecoin reserves ready to go for major dips. So I'm not going to go much in detail on the bonus here, taking out your initial investment on small cap altcoins. I previously did a full video on this. If you guys do want to check out that video, it's in my cryptocurrency guides playlist. There will be a link to that playlist in the top right of this video, along with over 15 other great videos that add a lot of value. So if you guys do want to measure fear and greed and see where we're at in the markets, you guys can just Google Bitcoin Fear and Greed Index. So this is the first fear and greed index I pulled up in Google. As you guys can see, we're currently in extreme fear at 20. And we can get some historical data below as well. The chart here shows the past 3 months. As you guys can see, when we were peaking in the markets, over $60,000 Bitcoin, we were around 70 to 80 in the greed index. And now that the market has crashed, we're as low as 10 in the fear index. So buying when it drops to around 10, 15 or less, in my opinion, those are good entry points where I would be dollar cost averaging and spreading out my entry points. And then when the market is in extreme greed here and maxed out around 70 to 90, that's really when you have to consider taking small profits, in my opinion. So I'm a very long-term crypto investor, so I'm not going to take huge profits like 40 or 50% of my portfolio. I'm going to do small amounts like 3 to 5% here and there. And then as we go, if things keep climbing, I'll start taking smaller percents as we move up until eventually the market will peak out and then have a correction. And that's when I'll look to start buying the dips. So you also have to spread out your purchases as well, because the dip can always keep dipping. So we're going to go over my investing strategy simplified. First, the entry strategy here, which I think is much more important than the exit strategy, especially if you're a long-term investor. Then the exit strategy isn't too big of a deal. But if you guys do take small profits on the way up, that will give you more funds to be buying on the way down. So when there's mass fear in the crypto space, dollar cost average on the way down during dips using a percent of my total bi-weekly income. So always have reserves and stablecoins ready to go, and never exhaust all resources on a single dip, unless it's something like the market crash we saw in mid-March 2020 when Bitcoin crashed around $3,500, crashing over 50% in one day. Of course, very few people actually picked up crypto that day. The majority of people were actually dumping crypto at any price they could get. So that's the thing, you really have to go against the herd here when you are buying fear. And that's hard for many people to do because naturally we do want to go with the herd. So buying at peak prices or during mass greed rarely works out in the short term, although with the correct cryptocurrencies can still work out well in the long term. If you buy a peak, be prepared to hodl very long term. So personally, I very rarely buy when a cryptocurrency is at a peak price. And if I do this, it's because I have concrete evidence that it's going to surge in the short term. And then if it does, I do take bigger profits and take out my initial investment, like I did talk about on the bonus. So that is something to consider with newer coins. They are going to be much higher risk when they're newer as well. And the higher profit there is, the more likely early investors will take profits, which will crash the markets. So just keep that in mind. If you are buying at peak prices, be prepared to hold long term, because more likely than not, people will be taking profits, especially when there's something that causes fear in the markets. So an example here I did write out of my entry strategy. If I have a monthly income of $10,000 per month and my bi-weekly check is $5,000 and I want to put aside 25% of that to invest, I would be taking out $1,250 out of each payday to add to reserves for buying future dips. So my strategy is somewhat altered from dollar cost averaging because I wait for bigger dips to buy in rather than just putting in the entire $1,250 per payday into the markets no matter what the prices are at. So that is the thing about dollar cost averaging. You're not really worrying about the markets or watching them. Every time you get paid, you're putting that set aside amount of money into the markets. So I do like to do an altered version of this because I do watch the markets and I do want to be buying the dips rather than just putting money in at any point in time. So I do save this up and I do buy in big chunks when we do have big dips, but keep in mind, you don't want to exhaust your entire reserves when we do have a big dip because the dip can keep on dipping. So after 3 months of doing this in an uptrend market with no big dips, I would have an extra $7,500 ready to go in my reserves. And then as we do start dipping, I would start spending this on the dips in certain percentages. So setting limit orders is another way to catch the bottom here of major dips, because more likely than not, when the dip does hit the bottom, it's going to recover somewhat within the next couple hours. So most big dips happen and recover within hours. So unless you're sitting at your computer 24/7, you're most likely going to miss the bottom of most dips. One way to ensure you can buy the dip is setting limit orders at lower prices where you are happy accumulating. You can also stagger these limit orders in case the price crashes further than expected. So I also do this, setting lower orders and staggering this. This is a way you can catch the dip as well with a larger amount of money, just in case it does dump much further than expected. So an example here, $1,000 buy order at $31,000 Bitcoin, $1,500 buy order at 30,000 Bitcoin, and then increased to $1,500 at 28,000, and then $2,000 at $25,000 Bitcoin. So if we did have a flash crash down to 25,000 with some bad news, it instantly recovers to $29,000. Then I did get these two orders filled, and I did catch some quick profits there because it instantly recovered back to 29,000. So keep in mind, this is just a simplified version of my investing strategy. This can be much more complex and I can go into much more detail on this. I don't want this to be an hour-long video. If you guys are interested in more detailed content like that, let me know in the comments below and I'll consider that for the future. So now we're going to go over my exit strategy before I end the video here. So when the crypto space is in the high greed zone and everything is already up 5 to 10x in the last 6 to 12 months, this is when I consider taking small profits on the way up, especially with small cap altcoins, because we have to keep in mind small cap altcoins are much more volatile than Bitcoin. Bitcoin is the biggest crypto in the space, much higher market cap than any other crypto out there, and it's going to hold up much better in a market crash, whereas altcoins are going to crash much more than Bitcoin. But just the opposite, when Bitcoin is on a steady uptrend and a lot of money is coming into the markets, greed is rising, altcoins are going to explode that do have major events coming up and increasing demand. They're going to go up much more than Bitcoin, as we've seen over the past few months. So that's another thing to consider for your entry and exit strategy. So a very small percent of people actually sell the top. So by spreading out sell orders and taking profits on the way up, I am more likely to catch some profits rather than waiting to sell the majority of it at a certain unrealistic price target. So that's the thing about the cryptocurrency space. The majority of new investors have very unrealistic price targets. So they hear about friends and family that did a 5 to 10x over the last year. They jump into Bitcoin, Ethereum, Cardano, maybe a couple other top 10 coins. They expect they can wait a year and get a 5 to 10x and dump it all at one price target and leave the space and go buy a Lamborghini. So the majority of these people never hit their goals and actually end up selling at a major loss when mass panic actually does kick in, like we did see recently. The majority of those investors that did dump were all newer people to the space. Of course, a lot of people that did invest a couple years ago that are up 5 to 10x are also taking bigger profits, but we're also seeing whales beginning to accumulate at these lower prices around $30,000 Bitcoin again. So doing this also increases stablecoin reserves and adds to your buy the dip fund. So while adding to the buy the dip fund from my bi-weekly paychecks, from the example we did talk about, $1,250 every 2 weeks, we can also be adding to this fund while taking profits on the way up. So that is something to consider. The more you start stacking in this, you may miss higher profits on the way up that you could have taken, but if it does crash, then you're prepared and you can start staggering and buying the dip. So day traders may do this with a large percent of their portfolio, but I'm more long-term, so I do this with a smaller percent of my portfolio. and have the majority of my portfolio in staking, lending, and other ways to earn passive income. So I will do a video in the near future on my staking portfolio and how much I'm earning and some of my goals going forward with staking and lending. So I also do lending through BlockFi. If you guys want to get signed up for that, you can earn over 5% passive income on your cryptocurrencies that are just sitting collecting dust anyways. And then you can get up to a $250 Bitcoin bonus by using my link in the video description or just going to blockfi.com/JRNY. So getting signed up for that and then doing a deposit, you will get a Bitcoin bonus, and then you'll start earning some passive income on your cryptocurrencies you hold there as well. And BlockFi, I do recommend for some newer investors as well, because you can do two-factor authentication. And for some people, this is much safer than holding your own private wallet. You guys don't know how many emails I get of people that got scammed because of their private wallet. There wasn't 2 layers of security, and they connected to some bad site and lost all their cryptocurrency in that single wallet. If you do have private wallets, I do recommend spreading them out as well. Don't keep all your cryptocurrency in one private cold storage wallet. So that is something to consider as well. And I am staking cryptocurrencies currently like Cardano ADA, doing some StormX, STMX, lending Bitcoin in BlockFi, lending Litecoin in BlockFi, some Chainlink as well. And I am looking to set up some other cryptocurrencies. PancakeSwap has good staking. SparkPoint SRK has some good staking, especially because they just set up the Spark swap, which is very similar to PancakeSwap. So you can also do limit orders to take profits on the way up. To ensure if a big pump happens and it comes back down, you were able to lock in some profits at the higher prices. So some people are scared things are going to keep rallying, especially because some of these influencers are doing $300,000 Bitcoin price targets or $10,000 Ethereum, and they're not really talking about buying peaks or anything, or really giving anyone any warnings. So that is something to watch out for when you do see major price targets like that, and we're at peak greed in the Fear and Greed Index for Bitcoin. That's definitely a time to consider taking some profits, and when I start taking some profits as well. So even if it does continue climbing, that's okay. For me, I only take small percents of my portfolio in profit and just staking and lending the rest, earning passive income. I don't want to be doing day trading all day long, because I do have a lot of stuff I work on the sides, the videos, websites, and other things I will be announcing soon as well. So that's my entry and exit strategy. I hope you guys found it useful. And if you guys do want to follow me on Twitter, I do post here throughout the day. You can follow me at JRNYcrypto to get some extra value. I do post here 5 to 10 times throughout the day, share some breaking news, and give some tips on here as well. So that's it for today's video on my simplified trading strategy. If you guys found this video useful, I do appreciate if you guys share this video with anyone else that may find this video useful as well. The more educated we get as a whole, the more we're going to succeed as a whole as well, especially because the majority of newer people are making major mistakes right now, leaving the space and only having negative things to say about the space. So that really does have a major effect on the space when you do consider this in the masses. So you guys can also like the video, comment below, subscribe, and hit the bell if you do want to be notified for my daily crypto videos. And I'll see you guys in the next video.